Hello? Can you hear me?
Hello, Jeff. How are you?
I'm good. All right, this is my volume up one sec.
All right, guys. So today, I have a special guest with us that's going to be joining us in our discussion, Mr. Jeff. Thank you for joining us. We had some troubles figuring the timing this week, but thankfully it worked out.
Yes, yes.
Um, my channel, so I could introduce the channel of Uncle Bull first. My channel, we focus a lot on technical work with the charts.
Mm-hmm.
And we now, since we're in a pandemic, okay, and we see a lot of fundamentals affecting the market, I would like to go through with you, and if you talk a little bit about your expertise in the market, I would like to go through with you about how oil has a huge effect fundamentally on different pairs and exactly the correlation between them. And we can sort of get into that, and then get into how China was one of the first countries that that their economies emerged right back due to oil, and etc.
Mm-hmm.
And we can take it from there.
Okay. So you just want me to talk about the impact of oil and some of the correlations? No problem.
Yeah, and some of the correlations with the currencies and what can we look out for.
Okay. So basically, oil, as you all know, is a major global commodity, and it basically runs our world. It's called black gold on the markets for a reason. Okay. When you have such, and especially during the pandemic, as we were talking about, when you have global economies shut down and you have all these different industries, factories, millions of cars off the road, the demand for oil starts to decrease. Because oil is a globally sold commodity that generates trillions of dollars for global exporters around the world, from Saudi Arabia to Russia, Iran, US, it's heavily impacted, just like any other product, by the supply and the demand of actual crude oil. Okay, so whatever you have, and then I'll talk about the impacts it has on different currencies and all that. But whenever you have a very low supply of oil and a high demand, let's just say there's production cuts, demand is very high because economies are flourishing. Manufacturing is very strong across different countries, showing us industry is running very well. Let's just say the automotive sector is also performing very well. So we know a lot of cars are on the road. Whatever it may be, that tells us oil demand is high and supply is low. The relative price per crude oil barrel goes up. Okay, when you have crude oil in the 40s, 50s, 60s, a lot of these countries around the world are doubling up their profits as per their production costs. And this is going to make sense in a little bit. So for most countries around the world, such as like the UK, the US, Canada, and other main oil exporting countries, it costs them around $25 to produce 1 barrel of crude oil. Okay, keep this figure in mind, because it is very important when we start talking about what happened when oil price dropped to the lows, and why the markets and why smart money, and I'll talk about that, wants to keep oil above $25 in this certain price point. Okay, so when we had relatively stronger economies before the pandemic, there were some Iran tensions going on. Any tensions in the Middle East drives the price of oil up, by the way, because investors are pricing in the potential of physical war. Usually when there's any type of physical conflict in the Middle East, it ends up leading to oil refineries or storage being destroyed. Okay, when you have the supply or refineries or productions being impacted and destroyed, obviously the price of oil goes up. This is how investors price that in. But anyways, when we had healthy economies, you notice that oil was relatively staying in the 40s, 50s, and 60s. This is very lucrative for all these oil companies around the world. And you have to understand that oil infrastructure is massive. There's more jobs created by oil, in my opinion, than many, many other industries, because with oil comes physical labor jobs, technology jobs, science jobs when these people are testing the oil. Just think micro in that sense. There's so many thousands of jobs created just around the oil market, where if anything devastating happened to the oil market, the global economies would crash. Okay? So then we had this coronavirus pandemic come to the scene. Okay? First, China was hit hard. Now we're going to talk about a couple of things. China has no need to buy any new oil right now. Okay? They have been storing up on Iranian oil for the last year, ever since the United States of America sanctioned Iran from selling their oil. The reason these countries sanction each other and go to war with each other over oil is so they can control the entire demand market. Every country has oil to supply and has pardon my language, has a lot of oil supply. It's not like oil is limited in the earth, okay? But that does not mean everybody is buying from each other. Countries choose who they buy from based on preference. That's why the US takes out all these Middle Eastern countries through war, not so they can take over their oil supply, so they can take over the oil demand. Because if you only have one or two nations or forces that control the oil market, it becomes a monopoly, and they can dictate supply, demand, and price as they want, and that's a lot of money and power, right? So that is one of the reasons why the US is always going after these countries in the Middle East and trying to sanction them, go to war with them. They're trying to raid and take over that demand as they work with Saudi Arabia. Okay, so that's just something to keep in mind, and that is the reason. If you guys remember, before this whole pandemic, I know it feels like in the last 2 years so much stuff has happened, but before the pandemic, right? Yeah. But before the pandemic, when it was just trade war stuff going on, you guys remember, of course, when Trump was talking about sanctioning Iran, going to war with Iran, all of that. Then we started 2020 with the Iranian general being killed. That instantly brought fear into the markets and inflated the price of oil, because people thinking there's going to be a war in the Middle East.
Yeah, there was big fears of World War III, especially popping off on all social media platforms, and
we saw gold inflate. Remember, we saw gold start rocketing up. We saw oil inflate, because that's what I was telling you guys, where they're bringing this fear into the markets. And then anytime there's conflict in the Middle East, investors start to price in the potential of supply being impacted through this physical war. Okay, so then you had oil at relatively healthy, at a healthy price, which we know most countries are turning a profit. Then we had this coronavirus hit, which completely destroyed the demand of oil, and at the same time, oil was heavily oversupplied and overstored. Even though the US sanctioned Iranian oil, so nobody could buy oil from Iran, so they could take that demand, China and Russia and other parties did not want to give their business and all that power to Saudi Arabia and the US. China was still illegally taking in Iranian oil backdoor, and currently, as we speak, they have millions and millions of barrels of Iranian crude oil stored on their ports, right? For that reason. So
very, very, very ironic how the way it happened.
Exactly, right? So the world is heavily oversupplied of oil, and nobody is using it right now. As you guys have heard, OPEC did production cuts. They tried to support the price of oil.
Correct.
That's one, right? That's one little boost. But everybody has to understand, I'm talking about over storage. Even though they are cutting production, they're just cutting production of how many barrels they're producing per day. All the barrels they've been producing per day still haven't been being used. They've just been being stored up.
Exactly. So they perfectly said. So they're just basically, because if the price is supposedly going higher, that usually means that the demand is going higher, but the demand isn't going higher. They're just manipulating it to go up by cutting supply.
Exactly. They're trying to cut production to increase the price, and then hoping demand picks up once the coronavirus picks up. The reason, and now you guys understand why these countries like Trump like if you see Trump go to his tweets, he's like, oil energy is back, oil up.
Yeah, this week.
Right?
Yeah.
If you see anything from Iran and these other countries, they're all like, oh, we're gonna do production cuts, we're gonna do this. Now you guys understand why. If oil stays below $25 a barrel, the price of crude oil, remember the production cost of all these countries on average? That's how much it costs them to make a barrel of oil. What's that mean in business? If your production cost is the same as your sales cost or even less, you don't make any money. If you don't make, if these companies, these major oil companies are selling oil, they can't sell oil because they have no one to sell it to, and oil price is below their production cost, they're actually losing money every single day. What this would lead to is these companies going bankrupt and going under, and those millions of jobs connected to oil would all be lost. That's what, and these
And we're already seeing that.
We're already seeing all these different oil companies,
exactly.
smaller ones, shut down and all that. Okay, so now you understand why, if these oil companies, especially in the U.S., go bankrupt, we're already seeing in the U.S. 20 million jobless claims, 30 million jobless claims. Imagine if the oil market died too, right? Those numbers would be doubled, tripled, and then what this leads to is, I'll talk about this as well. Is this, you have more people not working. You have more people with the economy on standstill. It's not the Federal Reserve that makes the economy run. It's the people. No matter what, it's not these corporations like Jeff Bezos that makes the economy run. It's the working class people, the people that get up, they go to work every day, they pay their taxes, they buy things, they use services, they put the money back into the economy. All money is going from hand to hand. Money just circulates. But when you don't have people working, that circulation stops, right? Consumer consumption goes down, inflation gets fucked up. Nobody is earning money, so nobody can spend money.
Exactly.
And
yeah.
right?
Yeah.
And we know that most people, especially consumers, and this is important because it doesn't matter on the micro scale, but when you have millions of consumers or citizens in the US, for example, that live paycheck to paycheck and they live on debt, they live off debt, right? They live off loans, credit cards, mortgages, their cars on a loan, whatever it may be. When you have people who can't work, they're not making any money, they can no longer pay back these debts. This is exactly what happened in the 2008 financial collapse, where you had this financial collapse and
when the housing market crashed.
Exactly.
And it was all based on false data and inflation of data.
Corruption, bro. Just pumping the numbers, fake numbers. Anybody's mom, dad, cousin, anybody could get a mortgage application get a mortgage in 2000, like during that time in the US. You could be a stripper and you could get 3 mortgages. You know what I mean? Signed at the bank, no problem. And nobody saw anything wrong with this. But until that debt built up and people could no longer pay that back, you had a huge ripple effect because you had all these mortgages. And what really crushed the financial market was a lot of mortgage-backed securities. There was a lot of security investments or different asset investments that were backed by all those mortgages, right?
Yeah.
So like the capital and everything that was funding those investments for banks was supposedly backed by these mortgages that were stable. And then look what happened. Okay. So we can see something very similar repeating now. And what I'm looking for is if lockdowns continue, if there is no coronavirus vaccine, oil demand is going to stay at these record lows. There's no consumer consumption of people driving on the road.
This was actually what I was gonna get to and ask you. Now we're seeing within this month that U.S. oil has been going up, the value of oil. Do you think we're just seeing like a monthly pullback to grab liquidity, or do you think that this is like the as you refer to it, I remember in your videos that I've watched, like the corrective phase?
I don't think we are at. I think we are just grabbing liquidity, doing some minor correction, and we're gonna continue back down on oil. But we have to look at the fundamental confirms, and that's gonna come back from looking at the supply and demand. So in my opinion, if economies do not open back up, there's nobody to consume the oil, from factories to industries to cars on the road to whatever it may be, right?
Correct. So even that we're seeing like a technical reversal, we still do not have, we have zero fundamental validation for actually for the oil to keep on going up.
And right now, even though we have those technical confirms, we might be exhausting. We're at key sell areas. I know like $35 to $40, a very nice sell area. You know what I mean?
Yeah.
Right?
Yeah.
But right now, it's very similar to trying to sell the stock market. You're going against you're going against the corporations, you're going against these oil companies, you're going against these guys that are going to do whatever it takes. Trump will spread whatever rumor he needs to make sure oil. Remember Trump spread that rumor that he was already talking about Russia and Saudi doing
Yes, and
production
Russia
cuts?
came out and said that they didn't finalize anything. They didn't talk about any
Exactly.
details. Yeah.
He just did it to boost the oil price back above 25 for that little period, and it went to
Yes.
27, 28. So these guys are desperate in that sense. It's very similar to like how the US stock market is bullish right now, but it
Yeah.
has no reason to be bullish. It should be crashing right now. But the Feds, they keep injecting and printing it because us as traders, we want to look for the most probable trade opportunities, but you have to understand there's way bigger impact of the stock market falling than us just taking short sells. All those corporations involved in the stock market in those different sectors, from technology, pharmacy, retail services, they will all go under. You know what I mean?
Yeah.
It's even more jobs lost, even more economic collapse. It'll take even longer to recover that. So these corporations, the government, these political leaders, they understand that. They're just trying to do whatever they can, spread whatever rumors and they're buying time, hoping that this coronavirus stuff fades and everything just goes back to normal. That's all they've been doing, in my opinion, is buying time.
Yeah, true. I definitely see it almost the same way, because although Trump has been coming out and saying that the US is opening vaccine or no vaccine, and he was also promising to deliver, I think, or promised to deliver the vaccine within the end of the year. But he's trying. I know he's trying to give market optimism.
Exactly.
He's trying to boost the market, which is the same style or same strategy that he's been usually doing. He's trying to get his out of his mouth, out of the White House, trying to lift up the stock market and lift up the oil in general. But as you said, and I totally agree, that there's still no fundamental validation. But how do you see it if Trump actually goes ahead and reopens the US?
If let's just say by a miracle they come out with some type of treatment or some type of whatever medicinal, whatever it is, right? Yeah. And they open the economies and there's no second wave, then things will start to eventually rebound and it will be a V-shaped recovery. Like, you know how they call a V-shaped recovery, like when you have a stock market crash, and it's very rare to have a V-shaped recovery where you just have the crash and boom, it comes back up.
And then a complete reversal up.
Yeah, okay. That's very rare to see, but that's what would happen if we have the economies open back up and we have like that vaccine and everything as well.
I could give you also access if we could open and look at the oil chart. That would be the oil chart. That would be great as well.
Yeah, you want to look at the storage?
Yeah.
Yeah, I'll show you guys exactly what I'm talking about.
Okay, I think to give you access, I have to make you host or co-host, correct?
Okay. Yeah, it says host disabled participant screen sharing.
Okay, here I think now you're. Can you share your screen now?
Right. Yeah.
Okay, perfect.
Okay, you guys see the screen?
Wait, yes, now I do.
Okay, so this is just the Reuters icon, but we can see a lot of information here. I'm just going to be searching crude oil, and this is what I really want to focus on.
I think the screen is stuck on the Zoom tab.
The Zoom tab, one sec.
Here. Yeah, exactly. Now I can see it. Correct.
Okay, cool.
Yeah.
So this is just information about crude oil through like a Reuters icon. If you guys know, like a Bloomberg terminal, it's very similar, right? It just tells you a lot of information that like you could find anywhere, but it's just all collected in one area. What we want to focus on is this floating storage, because we know that supply and demand is the major key in oil. Okay, so look at the dates at the bottom here, 2015, and then 2020 is here. Okay. On average, when we have had massive spikes in oil storage, we were hovering around 90 million barrels in oil storage. This is oil in storage not being used, not being consumed as just for reference. And I want to show something else after too. And I'm going to show you an exact reason. So see here around January 2019 when oil storage was extremely low. Okay, let's go to an oil chart. Let me remove all this. Go to the 1 month.
Perfect.
So January 2019, when oil was dipping low, so oil storage was dipping low, right? You see how oil storage was going down, meaning the supply of oil was going down. The same time the supply of oil was going down, oil price went up after January 2019 from $45 barrels to $67 a barrel.
Mm-hmm.
Okay, showing us that fundamental impact of supply and demand on oil is huge. Now we're going to see that again. Look now. See how we have this massive, massive oversupply. We are sitting here around 140 million barrels in over storage here potentially. Look at, and just in April 2020 alone, 2020 at the bottom, we have been increasing to that point. So look what happened to oil when we had historical oversupply that we've never seen again. What happened to the price of oil? It went to a historical low that we've never seen again. You see that direct correlation where when the supply of oil was very low and the storage was low, oil price was a lot stronger and more bullish. As soon as we had demand go down the drain from coronavirus locking down the world, and then we have this massive over storage of 140 million barrels, over storage, nobody using it, oil price goes down into the negative. It went down to the negative at historical lows we have never seen before. You know what I mean?
Yeah.
So that is really important to note, is that, and even when economies open back up, we have to understand this is floating storage. Before countries start buying new oil,
they have to use these.
They have to use all this. They have to they have to drive all this down, bring it back to normal levels, cut production, and do all that. You know what I mean?
So yeah, we still have a long way to go.
Exactly. We still have a long way to go. So, and then when I'm looking at oil too, I'm seeing the same thing. Like this monthly is just flipping. We have this huge wick range still to the lows. You know what I mean? And overall, so bearish, like very, very sellers impulsive moves. And then you have these corrective buys, right?
Yeah.
So it's very clean sellers market structure. These guys are doing what they, and if you go on an intraday perspective, look where oil created a support before it started inflating around $25 a barrel. The production cost of most countries, right?
Mm-hmm.
If oil is below this price, this is dead. This means dead energy companies around the world. All those jobs lost, all those companies going under because they will not make any profit on any oil they sell. So that would just lead to that economic collapse. And then as per correlation, the biggest correlation for oil is with the Canadian dollar. Whenever oil is strong, the Canadian dollar gets a boost because Canada gets major revenue from oil exporting. That's one of Canada's main revenue sources. Yeah,
and also we can see also how we saw it in the past weeks when we were taking trades with JPY pairs, and when we were taking with gold, we were seeing how when the US oil starts to go up, it also gives like a huge optimism to the market that the world is coming back and we're on that way to get there. And then that is crashing, making the safe haven pairs, let's say like the JPY and the gold, head downwards. Correct?
Yes, so exactly. Perfect on the dot, bro. So whenever you have, especially, it's not always in that sense. It depends on the market conditions and environment. But right now, as you said, the worlds have been on lockdown. Whenever you see oil going up, it makes investors start to price in economies rebounding, okay? So what investors do is they move their money and their capital out of these safe havens, such as the Swiss franc, the US dollar, which is a safe haven. During this economic uncertainty around the world, the US dollar becomes a safe haven. The Japanese yen, precious metals like gold, they move their money out of these areas and jump into higher risk, higher reward investments, such as the global stock markets, such as buying more oil. And then, of course, these risk currencies, like you start to see AUD, Euro, GBP, they rebound from their lows, right?
Yeah.
So it all works in correlation like that. And it's, in my opinion, when you have these big fundamental catalysts in that sense, smart money, these guys, these market makers, we all see the money move happen as a collective. When you have massive optimism, all yen pairs go up. You know what I mean? At the
Yeah.
same time. And we'll never know who's doing that move, but we know what's happening. I would love to meet those people. You know what I mean?
Probably never will. Yeah.
We never will, but you get what I mean. Like,
Yeah.
it's so interesting how you have this massive optimism comes out, and then instantaneously on the same minute, all yen pairs go up. All USD pairs like GU, EU, AU, they all go up. The stock market goes up all at the same time. Gold drops. Like, somebody is moving massive amounts of money and liquidity at once, making these moves happen, or like some funds collectively. We'll never know who, but it's happening, right? We can observe the cause and impact.
Correct. They say also as well, during a recession, this is when the most transfer of wealth around the world happens.
Yeah.
I think, and it is due to the people that are making these moves and making these the moves that you just talked about. And yeah, continue.
And you know what it also is? The transfer of wealth. It comes from the stock market crash. People have to understand. Remember how I was talking about that it's the working class people that make sure the economy is run. That it's like, for example, banks aren't trading their own money. When you go deposit money into your bank, and they're using your money and investing it. That's all banks do. Whenever you put money in the bank, they take that money. They just don't tell you, but it's because it's all digital. Your balance will always look the same. But in reality, they are using your money along with millions of other people's, and they're using that capital to invest in the markets, from currency to stocks to whatever it may be. They'll make 99% and probably give you 0.001% on your savings account interest, right? So banks are always using other people's money. It's the same with the stock market and that transfer of wealth. The transfer of wealth happened where the money went from the average class working people, the people who invest in the stock market through their pension, through their 401k, because all these different insurance plans and different retirement plans, saving plans, they all involve investing in the stock market. The scary part is none of these people are aware of this. They don't know. They know that they're investing with their financial advisor, with their bank. They don't know what stock their money is in. They have no idea.
Yeah, they have someone to do it for them.
They have someone to do it for them. Most people just go see that their 401k has gone up a few percent, whatever it may be. So when you have a massive stock market crash, the whales and the market makers, they're ahead of the curve. They're probably the ones short selling the market and taking out. And guess who gets hurt? It's the guy who was working for 40 years, submitting money into his pension plan, and that pension was all in fucking energy stocks, or this person's 401k was all in these bank stocks, or this person's. It's the collective working class people, their pensions, their 401k, their savings plans. They get cleared out. They lose everything. They lose their retirement, and that's money. Wealth goes to the rich. That's why that saying is the rich get richer and the poor stay the same.
Yeah.
Right? Because that's really what happened with that transfer of wealth. Is when that stock market crash happened, yes, a lot of banks and these people lost money, but the whales, they collected and took that money. They got
it, yeah.
They took that money, they collected that money. Same thing with oil. The reason why oil went to negative 40 is because nobody wanted to pick up the futures contract. The futures contract on oil is a set price an actual oil company picks up to deliver a certain amount of oil as per that contract price, right? Because oil demand was so low and storage is so high, no company wanted to take on that risk of picking up more oil storage because they had nowhere to put it, nowhere to deliver it to. So what happened? The price of the contract keeps dropping until somebody picks up the order. The price of the contract keeps dropping. Finally, at minus 40, somebody picked up the order.
Yeah.
And
made.
Exactly.
Yeah.
And think about how many people were buying oil $1, $2. I had friends and people that never traded saying, "Hey,
that's when you know it's wrong. That's when you know something's going bad. When people who don't usually invest want to invest.
Want to invest.
What happened with crypto, with Bitcoin as well, when it got to the high.
Same thing. So what we saw happen here, all these people are probably buying in here, millions of people, millions of dollars of liquidity, thinking oil can't go any lower than zero, right? Oil drops to negative 40. all that order flow and money got cleared out. All those people got margin calls. Remember, I was even sending articles about like those Singapore oil bank traders losing billions. People got screwed, right? But my question is, I bet the same person that picked up, or the same fund, the same group of people that picked up the contract at minus 40 were the same people that were short selling oil and cleared out all those people buying. Then they took that liquidity of those people that got screwed in the buys and they put it back in buys from minus 40 and took that contract out. Because then as soon as oil goes from minus 40 to plus 36, they're already up. They're already up like $70 a fucking barrel. You know what I mean? This is their move.
Yeah,
right? So whoever, it's
yeah.
insane. So whoever got that contract from minus 40, right now they're up $70, $72 a barrel if on their positions, on their buy positions of holding these oil contracts, which is insane.
Yes, absolutely, truly insane, and we are definitely living in a unique time, in historic times.
Yeah, it's crazy stuff, man. But the way you explained the yen and gold and everything like that, it's 100% spot on.
Because we realized it, because the channel and I, we were taking GJ shorts, I think in the last 2 weeks, 2 weeks ago, sorry, and we noticed, I think I texted you about it when we talked about KSA announcing that they're cutting oil production. And we saw
all yen pairs flipped, right?
All yen pairs went completely the opposite way.
Yeah, they just flipped.
But because I had, because I thought of it in a fundamental way afterwards, and I saw that this was just a pullback before, because of the shock of the news that KSA let out. So we just waited for the pullback, then we continued riding it down until we went back again.
It gets waved off. You know what I mean? Yeah. If it's not, unless we get long-term optimism confirmed, which is going to be a vaccine, and the economy is opening back up. A lot of this optimism is, in my opinion, is going to get waved off if nothing changes.
Correct. I think this is something very crucial as well that I've learned through time, that when you read the news or when you read the economical calendar or when you read any specific fundamental news that will come out and affect the market, read if this will affect us for a period of time, or is this just a shock to the market and the market will return normally? Because many times it is just speculation, or it is just like Trump has decided. Yeah, even if it's not a rumor, sometimes it's like he has decided to do, but he didn't do yet, or they did not implement it yet. So the value of it has not been yet priced in the market. So the market's probably going to wave that out. So I think it's very important as well to not only read, when you read that title, even the only title, pay attention to the exact words that's being used.
Yeah, determine if it's just a micro impact that's just going to be waved off, or if it's actually something big, you know what I mean, macro, that's going to actually impact something higher time frame for a long period of time. It's very smart.
Exactly. And of course, that is, you will, if you start paying, and I always recommend for everybody on the channel to follow Trump's Twitter. And because sometimes you won't find the news that you're looking for as we usually check in the economical calendar and Forex Factory, the news section, stuff like that. Keep an eye on Trump's Twitter, as it is in recent times now doing huge effects as well.
Yeah, you guys should follow some of these Twitter pages, Live Squawk and like Walter Bloomberg. These ones are good. These guys are good. You guys should check these guys out. And like this guy, he only posts stuff from Bloomberg Terminal or Reuters Icon. This is a good page as well. Yeah, check these guys out, like Walter Bloomberg, the Live Squawk. These ones are good Twitter pages to follow. Just keep the notifications on. And then like right here, like 1 minute ago, Fed Chair Powell discussed economy in a virtual event. You know what I mean? Like it's pretty good stuff. So you guys can check that out too.
That is perfect. That's it, basically, the things that I wanted to get into with you. You made a lot of things much clearer, and it is now shown, like after having this session with you, how like it's not like before. Even now, it is even more important to keep to keep paying attention to what's going on around the world, and fundamentally as well, because there's so much external factors that are affecting the market that
Exactly.
a huge part. Truly believe that a huge part of the analysis should be based fundamentally, and your technical skills should be a way for you to execute the trade correctly and
Yeah,
to get the
they
best.
should work hand in hand once you have the understanding of fundamental sentiment and bias. Because regardless if it's going to be, the way I look at it is very simple in terms of something, any type of conflict or issue is either it's going to have fear, it's going to have periods of fear and periods of optimism. It doesn't matter if it's Brexit impacting the UK, even Brexit. You saw Brexit have points of fear where GDP was dying, and
Yeah,
then you had points of optimism where it went to 148 when Boris got elected.
exactly.
It all runs on these different catalyst reads of fear or optimism. So what we can do as traders is every time we have these fundamental catalysts, doesn't matter if it's a real war, doesn't matter if it's this pandemic, Brexit, a trade war, there's always going to be something in the future. History is always going to repeat itself. As long as we can understand to dissect it, right, and understand the impact of it, we can always have that advantage along with our technicals.
Mhm. Exactly. Absolutely. Absolutely correct. This is actually the conclusion that I came to as well when we started trading through the Corona times and the last couple of months, and we saw how many more external factors are affecting the charts and the way we trade, and we started realizing correlations between different pairs and commodities and etc. But thank you for joining us.
Yeah, just somebody. I think somebody's had a question about
Yeah,
oil. So
I just want to get through. If anybody has any questions, we will do like a 10-minute Q&A session, and please write them down. But I can go. One of Canada's main exports are oil. Higher prices equals higher revenues for Canada equals stronger CAD. Correct.
Yep, exactly. That's what it is. It's not just a negative correlation between USD CAD. It's a Canadian dollar specifically. So it can be CAD JPY, GBP CAD. For example, if you have oil markets heavily inflating and you have that optimism, CAD JPY is a great buy because you have one-sided volatility of oil strength boosting CAD, and you know when you have optimism that JPY loses strength, right? So you can have great one-sided impulsive buyers moves on a pair like CAD JPY or CAD CHF. Whereas like you could look to sell Euro CAD or sell you know what I mean, AUD CAD if the primary is looking. But somebody said about question about my story. What do you mean? Like just like how I started trading and stuff? Yeah. So basically, I started trading in 2017. I was just learning pure technicals. I went through the motions that everybody goes through. You try different signal chats. You go through a lot of trial and error.
I was always saying as well, the reason also why I got baited into it was because I thought at first glance it was a quick way to make money.
Exactly. I thought the way I was introduced to trading was through a mentor that was flexing demo profits, showing millions of dollars a month. And the first month I got into trading, I was already telling my mom, get ready to retire. You know, you know what I mean? Like I'm gonna get you a house, whatever you want. So I really had a very, very poor exposure to the market, but this led for me to find what works for me through a lot of trial and error, back testing the technicals. And then I came to the same point and conclusion that you guys are at. I would be following just technicals and different things like market structure, key levels, whatever it may be. But then all of a sudden there'd be some impulsive move that goes completely out of direction, completely breaks structure, and you're just sitting there wondering why. So I wanted to dive into the why as much as possible. The market is a huge, huge mystery. We will never truly know what happens behind the scenes, but there are a lot of questions you can get answers to of why did this happen? Why did this impulsive move happen? If you really put in the effort to go back test and see what the fundamental catalyst or event was, right? Yeah. So over repetition of just getting obsessed of wondering why did GJ go this way? Why is US dollar this strong? Why is this happening? Over that constant obsession and putting in constant chart hours over and over, along with trying to master my emotions, Because emotions, honestly, I'll tell anybody in here, technicals, very easy to learn. Fundamentals, anything is easy to learn, okay? We all have the same brain. All of us can learn anything we want. It's just that people learn things at a different pace, which is perfectly fine. Okay. No, I never find anybody dumb who puts in effort. They might just take a little bit longer to learn something. I call people dumb that don't put effort into anything and that are lazy because they're not even using their brain how they could be. Right. So with that being said, we can all learn anything. The hardest part of trading is mastering your emotions and your own demons, your own bad habits, whether you're very impulsive, whether you're very laid back and
it
scared.
always be reflected in the way you trade.
It will always be. If somebody is angry driving in traffic, how are you going to handle taking a loss of money? Right? You have to.
Absolutely.
Exactly. So you have to really work. You have to really be open and honest with yourself and say, you know what? I'm a very angry person when this happens, or I get very emotional when this happens. What can I do to be better? How can I master this? Why? If I'm a very impulsive trader and every time I look at the charts I want to take a trade, how can I go against that? Maybe I'll make a 3-strike rule. Maybe I'll only trade 3 days a week. You have to have a disciplined, systematic approach to reprogram your mind and all your garbage natural habits to because most humans, everybody like us, the natural habits we have formed since we were kids, which is wanting things very fast, wanting things very easy, being very impulsive. This is all terrible for trading. Okay?
We have to unlearn all of that.
Exactly. All of our natural emotions and our natural habits are absolutely destructive for trading. We have to go against what we have been programmed and taught from a very young age and just become logical machines that only follow that. Exactly. So that is, I learned all that after going through periods of just crashing accounts, feeling depressed, feeling like there's no point to this. It's all just about always becoming a better version and conquering yourself and defeating that demon. Because the way I see it is, everybody, one of us has a voice inside deep in our gut that's a good instinct voice. Okay? What I mean, and why I say to deepen your gut is because it's hard to hear. For example, when you're in a trade and it's going against you, deep in your gut, you're having good instinct telling you to close the trade. This does not look good. Take the small business loss as per your risk and reward and get out and try again. Everybody has that. But you have this demon on your shoulder.
You want to keep it.
Yes, you have this demon on your shoulder. Why do I say the demon's on your shoulder? Because he's loud, he's abrupt, and he's yelling in your ear saying, no, to move your stop loss. No, add another position. Do over leverage and put a double the lot. It's going to come back down. You know what I mean? Yeah. You have this demon on your shoulder that because of your natural bad habits, just from how you are, that's what's projecting loudest. But everybody has that instinctive, smart voice deep in their gut. You have to learn to kick the demon off your shoulder and bring that instinct out and trust your instinct. Because you know when a trade is not looking good and to get out. But most people will stay in it due to just their own ego and that demon. You know what I mean? And just emotions.
Absolutely. And I also said trading, I also am a firm believer that trading will change you as well, like change who you are. And
100%.
The decisions you start taking in the market, you will start taking out in your real life with your family, with your relatives, with your friends, with you, how you start thinking objectively.
How you operate, everything, man. Yeah, it's crazy. It's so crazy.
How you start thinking objectively instead of emotionally, how you start being proactive instead of reactive. This is why we plan for a trade. Every weekend we sit down, we do a Zoom session a day before the market opens, and we plan for the week. And imagine if you do that for your life, and if you're seeing the results, the constant winning results from your profits, and it's because you have actually put your time and effort and you have planned for it and you have understood it. So this is
and the beauty is, the beauty is you're not waiting for a promotion or somebody to say, here, apply for this job and earn more. There's no limit, right? There's really no limit to how much you can grow. The only thing is, I want people to understand that trading is a long-term game. If you really want financial freedom money and you want to be like those market makers in Wales, dream about, you have to have a 10-year, 20-year, 30-year plan, right? Or at least be ready to be in the markets for that long period of time. Because these guys who have millions of dollars, they've been in the markets for decades, right?
Yeah, absolutely.
Yeah.
Absolutely. We're gonna take these two questions. Then,
Cool.
if you have something to do, we won't keep you.
Cool. So, Joe,
yeah.
Current optimism in the fake V-shaped recovery of the stock market, oil, which is also a risk asset, BTC. Why did safe haven gold lose big percentages? Oh, why did not safe haven gold lose big percentages? Because this is due to very similar about how we were talking about oil. Gold is also a physical precious metal and is heavily driven by the supply and demand of actual gold. The corona, and let me actually pull it up again, if I can.
Yeah, do that. You have access.
Let me see if I can. I don't know if it's going to show it here, but there was this tracker showing the impact of COVID on actual gold impact right here. See here? So we know that gold is heavily impacted by supply and demand. It's physically sold. It's a precious metal. When COVID first came to the scene, there was many gold mines in production around the world that was either temporarily suspended or reduced operations. So what does this mean? Limited supply. At the same time, you had mass fear, which made the demand for physical gold also increase. Okay, so even though we're having some of this fake optimism, the demand for physical gold is still very strong by smart money and by these whales, and the physical supply is being limited right now, especially delivering the supply as well, because of a lot of these gold exporters have temporarily suspended or reduced operations, right? Like even copper, nickel, zinc, they're all either temporarily suspended. Here you have the precious metals, gold. Everywhere here marked with main gold exporters is temporarily suspended operations. And this is purely due to the impact of COVID outbreak. A sharp drop in global demand, which first started, but is actually the supply. So that is the reason why gold has still been holding such bullish market structure, even though we've had a bit of this optimism. But as you've seen, with the fresh optimism we had this week, gold did fall off from its 1764 highs, and it's almost like down back to 1700 now. So, but that is the reason for that. And then two, where do I see gold next? That purely depends if nothing changes with this current market climate. If we have economies not open back up, lockdowns continue, no coronavirus vaccine, the demand for physical gold is just going to go up as it's obviously a precious safe haven. And then I can only see the price of gold going into like the 2000s. But if we have economies rebound and long-term market optimism and global stock markets going through the roof, then there's no reason for smart money or these investors to hold on to physical gold. They'll liquidate their longs, they'll sell the physical gold they have, and they'll jump into more higher risk, higher reward investments, and then you will see obviously gold price drop. So it really just depends on that. And then the economic depression, I personally do think it's going to come. I think the oil market's going to take a heavy hit, and if oil goes back below 25, we know a lot of those countries will suffer, and pretty much those companies will go bankrupt, and that will be a huge catalyst to lead to an economic depression, in my opinion. But yeah.
Thank you. Thank you.
Worries.
Man, thank you for this session. It was great to have you.
Yes.
And I will pull up again your Telegram channel, and I will also, and your Instagram, I will show it to everybody. And thank you for being here. Thank you for your insights, and it was great to have you.
Yeah, no worries, man. If you save this or anything, I'll also tag you and like put it on my YouTube or something too after you got it done, and tag all your stuff.
Perfect.
Okay.
Thank you very much.
Okay, thanks for having me, guys. Take care.
Appreciate it.